Okay, so our next topic is shutdown point. Okay, shutdown point is the level of activity below which shutdown point is the level of activity below which it is not beneficial. It is not beneficial for the firm, for the entity, the level of activity below which it is not beneficial for the entity to continue its operation and hence decide to shut down temporarily. Temporarily. Shutdown point is that level of activity below which it is not beneficial for the entity to continue its operation and hence the entity decides to shut down temporarily. Okay, so we already learned break even point. Break even point is that level at which there is no profit, no loss. Okay, shutdown point is a point which is even below the break even point. Normally shutdown point will be below break even point. It is that level. Shutdown point is that level below which there is no benefit in continuing the operation. It is not at all beneficial, so we have to shut down. Such a level is known as shutdown point. So we have to analyze this carefully, only then we will understand the concept behind that. So let us take an example. Okay, suppose you are starting an institution, you are starting a small coaching center. Okay, and you are going to start this, you have already started, and you are planning to start a costing crash batch. Okay, so there is a costing crash batch. Okay, you have already decided the fees to be paid. So one student fees per student, say fee per student is rupees 2500, and you have already assessed the variable cost. Variable cost per student will be rupees 500, which means from each student the contribution will be rupees 2000. Clear? This information you already have. Next, what is your fixed cost? So actually your expected fixed cost is 1 lakh rupees. Okay, 1 lakh rupees for this, say this costing crash batch is for 1 month. Okay, so for this crash batch, you are for this batch, okay, for this batch which is 1 month, you are expecting a fixed cost of 1 lakh. And if we get the split up fixed cost, you have only two fixed costs. One is rent. Okay, you are paying a rent for the classroom, which comes to rupees 25,000, and there is another fixed cost which is faculty payment. Okay, you are calling me, you have already approached me to take this, to do this costing crash, so I agreed for that, and my payment is faculty payment, rupees. 1 minute, I'm going to change the figure. Let the rent be 20,000 and the faculty payment is 80,000. So total fixed cost for this batch will come to rupees 1 lakh. Perfect. Okay, so this fixed cost can be categorized into two. Rent, we can call it as unavoidable fixed cost. Rent is unavoidable fixed cost. Why is it unavoidable? Even if you are discontinuing this batch, which means even if you are canceling this batch, you have to pay rent. So rent is an unavoidable expense. Clear? Whereas faculty payment is avoidable fixed cost. Okay, what is avoidable fixed cost? This FC can be avoided, this FC can be avoided if the batch is cancelled. If you are cancelling this batch, you don't have to pay me, you don't have to pay faculty payment. So this fixed cost is avoidable fixed cost. Got it? Okay. So what is shutdown point? Okay, shutdown point. So first let us understand the formula, then we'll do an analysis. Okay, learn the formula and then we'll understand that. So shutdown point is equal to avoidable fixed cost divided by contribution per unit or PV ratio. See, the denominator can be either contribution per unit or it can be PV ratio. So you already know how this works. If you want the answer in units, then the denominator should be contribution per unit. If you want the answer in rupees, then the denominator should be PV ratio. Good. Shutdown point in units means denominator will be contribution per unit. Shutdown point in rupees means the denominator will be PV ratio. Okay, so let us apply this formula. Let us apply this. Shutdown point is equal to avoidable fixed cost. In this case, our avoidable fixed cost is 80,000 rupees. So 80,000 divided by, we already know the contribution, it is 2,000. 80,000 divided by 2,000. It is not rupees. Rupees 80,000 divided by rupees 2,000 per student. Okay. So the answer will be, see, whenever you have this, see, rupees 80,000 and rupees 2,000 per student, obviously the answer, the unit for this answer will be students. Okay, denominator, you check the denominator. What do you have in denominator? It is per student. So the answer will be students. So the answer will be 40 students, which means shutdown point is 40 students. The how to understand this 40? What is the meaning of this 40? If the expected number of students to join this class is below 40, okay, you are expecting the students to be less than 40, it is better to shut down. You don't have to, it is not beneficial to continue this class, it is better to shut down. But if there is at least 40 students, you should continue the class. This is how, this is what this 40 represents. Got it? Okay, so let us understand what is the significance of this 40 students. So let us do a detailed analysis. So suppose class is continued. Okay, class continued with 39 students, 40 students, 41 students. Let us analyze each one of these: 39 students, 40 students, and 41 students. And another situation is class discontinued. Okay, so 4 scenarios. Contribution. Under each scenario, what will be the contribution? If 39 students are in my class, 39 into 2000, contribution will be 78,000. 40 means 80,000. 41 means 82,000. These will be the contribution. If the class is discontinued, which means if the batch is cancelled, you are not going to get any contribution, right? Contribution less fixed cost, we get profit. So what is fixed cost? If the class is continued, you have to incur both these fixed costs. You have to pay rent as well as you have to make faculty payment, which means your fixed cost will be 1 lakh rupees. Whereas if you cancel the class, you don't have to pay faculty payment. So it will be only the rent, because rent is an unavoidable expense, right? That is why we have to pay, we have to incur rent even if the batch is cancelled. Okay. So profit under each of these scenario, profit or loss. Actually, it will be loss. See, first scenario, 39 students, loss will be 22,000. 40 students, loss will be 20,000. If 41 students, loss will be 18,000. And if class is cancelled also, your loss will be 20,000. See, now it starts making sense, right? See, what is the significance of this 40? Let us understand. See, if you are continuing the class with 40 students, which is your shutdown point, okay, if you are continuing the class with 40 students, you will have a loss of 20,000 rupees. Then why we need to continue? It is a loss, right? But even if you don't continue the class, even if you cancel the class, you will be incurring same loss of 20,000. Even if you cancel 20,000 loss, even if you continue the class, then also the loss is 20,000. Which means if there is 40 students, obviously you can continue the class, okay, you are not going to make any additional loss. It will be a same, it will be an indifferent situation, so you may continue the class. Whereas if it is 41 students, then also it is loss for you, but the loss is slightly lower than the loss which you would incur if you discontinue the class. Got it? If you discontinue, 20,000 is the loss. If you continue the class with 14,000, the loss is lower, right? You have to incur only 18,000 rupees loss, which means if 41 registrations are there, definitely you must continue the class. Got it? Whereas if there is only 39 students, see, your loss will be 22,000 rupees. So better than continuing the, it is, in this situation, it is advisable not to continue the class, because if you cancel, your loss will be only 20,000. Got it? So if the, so let us understand the theory. What does the theory say? Shutdown point is that level of activity, okay, this is that level of activity below which, see, if it is below shutdown point, there is no benefit in continuing the operation, because the loss will be higher. There is no benefit in continuing the operation, hence the entity decides to shut down. Such a level is known as shutdown point, okay. So the formula is, what is the formula? Avoidable fixed cost. Shutdown point is equal to avoidable fixed cost divided by contribution per unit or PV ratio. Got it? See, I will tell you one easy method to remember this formula. How this formula is working. See, actually, our fixed, we know break even point, right? Big break even point is equal to fixed cost divided by contribution per unit. But in this fixed cost, rent is unavoidable, which means whatever decision you make, anyway you have to pay your rent 20,000. So you don't have to bother about rent because it is unavoidable. You have to bother, you have to worry only about faculty payment, which is avoidable fixed cost. This can be avoided if you are canceling the class, right? So you have to take care of this faculty payment. So in order to take care of this 80,000 rupees, at least how many students should join the class? Okay, that is why they have created formula. Shutdown point is equal to avoidable fixed cost divided by contribution per unit. So we can understand that, we can see that if 40 students join the class, they will be able to recover this faculty payment. Hence it is called as shutdown point. So at least if we are not able to recover the faculty payment, okay, if we are not able to recover the faculty payment, it is better to discontinue the class, else we can continue the class. Got it?